Today we're going to take a look at the 203K loan program. My name is Eric Scharf. I'm an FHA consultant, also home inspector, a realtor, and investor. So I deal a lot with people that are purchasing houses to rehab them and purchasing houses to sometimes flip them. But the 203K loan program is basically designed for people typically to buy a fixer-upper they're going to live in and be able to buy a house that many times they wouldn't be able to purchase because they don't have the money to fix it up. But the 203K loan program enables you to purchase a property, and then once you close on the property, to have money to do the rehab work. So these 203K loan program is typically turning up fixer-uppers into dream homes. So if you're out looking for a house and you see a house that looks like one in the picture above, you can actually qualify to buy that house and have the house fixed up by a licensed contractor and turn out to be like the picture of the property below. Also, sometimes people will have a house and they'll refinance it using the 203K loan program, and they'll be able to fix up a house that they're living in now for their refinance. So let's go over about what the 203K loan program covers. Like on the left, you see the kitchen, and then we remodel it and turn it into a new updated kitchen. Again, that can be done on a house you're purchasing after close of escrow or through a refinance of a house that you own now. So if you want to buy a home that needs repair or finance need repairs to your current home, the 203K loan program by the U.S. Department of Housing and Urban Development, HUD, may be a good option for you. A home that needs repair that you are buying, on the left is something before and on the right after. So you can finance need repairs to your current home on the inside. You can also finance repairs to your current home on the outside. This program allows you to finance a purchase of a house or refinance your current mortgage and include the cost with repairs through a single mortgage. The 203K loan program is HUD's primary program for the rehabilitation and repair of single-family properties. 203K loans are provided through HUD-approved mortgage lenders nationwide and insured by the Federal Housing Administration, FHA, which is a part of HUD. Section 203 refers to part of the law, part of the National Housing Act, which allows FHA to make this mortgage insurance available. So the FHA mortgage insurance, 203K is actually a mortgage insurance that the lenders use to make it qualified for this program. So loans are beneficial for low and moderate income individuals or families, since the loan down payment can be as little as 3%. While individuals, local governments, and nonprofit organizations may participate in borrowers in the program, the property must be used as a principal residence by an individual or a family. So how does the loan work? You can take out a 203K loan as a 15 or 30-year fixed rate mortgage or as an ARM, adjustable rate mortgage, from a HUD-approved lender. The total amount of your mortgage will be based on the projected value of your home after the renovation is completed, taking into account the costs of the work. So basically, if you're buying a house that is for sale for $200,000 and it's a fixer-upper, but it appraises for after repair value of $300,000, then you have some room between a $200,000 and $300,000 amount, maybe $75,000 or $80,000 you can put into a escrow account after the loan closes in order to do repairs. So a portion of your loan is used to pay for the purchase of the home, or in the case of a refinance, to pay off any existing debt. The remainder is placed in an interest-bearing account on your behalf and released in stages as rehabilitation is completed. FHA requires you to use a minimum of $5,000 towards eligible repairs or improvements, and that you complete the repairs within 6 months after the loan's closing, depending on the extent of the work to be completed. The first $5,000 primary covers eliminating building code violations, modernizing or making health and safety related upgrades to the home or its garage. Here's a list of additional repair items after the required items are covered, which included but are not limited to roof repair, roof replacement, replacement windows, new doors, kitchen remodel, bathroom remodel, room additions, adding a second story, waterproof a basement, solve lead-based paint issues, repaint a house, furnace and AC replacement, electrical system repair, plumbing system repair and replacement, new floors, carpet, tile, laminate, flooring, linoleum, kitchen appliances, driveway repair, sidewalk repair, grading issues in your yard to solve, basement flooding problems, well and septic repair replacement. So you cannot include improvements for commercial use or luxury items such as tennis courts, gazebos, or new swimming pools. You can do repair to old swimming pools, but you can't put in new pools. So what are eligible homes? Here's pictures of all different homes. So how can you tell if a house that you're going out and wanting to put an offer on is eligible, or a house that you've already made the offer and it's been accepted? How do you know if that's eligible? You may use a 203K loan to finance the rehabilitation of the following types of properties. However, cooperative units and investment properties are not eligible. No cooperative units, and you can't be Mr. Than Marrow flipping houses. No investment properties that you're not going to be living in. So what is a cooperative unit? Condominium versus cooperative. In contrast to condos, co-ops are not considered real property. When you buy into a co-op, you become a shareholder in a corporation that owns the property. As a shareholder, you are entitled to exclusive use of a housing unit in the property, so no cooperative units. You may use a 203K loan to finance the rehabilitation of the following types of properties. A 1 to 4 unit residence that has been completed for at least 1 year. Examples include detached homes and townhouses. Condominium in 1 to 4 unit buildings. Interior improvements only, and there are additional restrictions for this kind of application of the loan. Mixed-use residential properties that include commercial space. Conversion of a 1 unit residence to a 2, 3, or 4 family dwelling. That means you can you can be purchasing a single family unit and then using a 203K to convert it into a 2, 3, or 4 family dwelling. So for smart investors, people that want to use this loan to purchase a house, you can then also use this to finance residential units that you're going to be renting out once you move in there. Conversion of existing multi-unit dwelling down to a 1 to 4 family unit. An existing house or modular unit on another site that can be moved onto the mortgage property. Release of loan proceeds for the existing structure on the non-mortgage property is not allowed until the new foundation has been properly inspected and the residence has been properly placed on and secured to the new foundation. Homes that have been demolished or will be raised as part of rehabilitation work if some of the existing foundation remains in place. So what are the eligible home improvements? The 203K loan covers a range of home improvements, and these include but are not limited to the following. Remodeling bathrooms or kitchen, including new built-in appliances. So you take a look at the picture above, that's your old kitchen with your beautiful flower design on the wall, and then look at the picture at the bottom. That's a huge change. So you can make a huge change to the 203K program. Wallpaper, that's the word. The wallpaper on the top. Take all that out and redo your whole kitchen. Or a bathroom model. Look at that beautiful tile on the left. That's pretty retro, but you can update it to a current modern state. Put in new plumbing and make sure you have really good hot water when you take a shower in the morning. You can replace a roof, gutters, and downspouts. You can redo the roof if your roof is leaking. You can add a family room, bedrooms or bathrooms. I had one customer that did a remodel very similar to this, and they added a whole new master bedroom and bathroom. Replacing flooring, tiling, or carpeting. There's beautiful before and after pictures. Adding a second story, especially if you live in an area where you see that the house values are going up, you add a second story and that can add incredible value to your property. Or if you go into an area and you're going to buy a new house, you can actually buy a single story house, and then once you move in there, you can actually, or once the loan closes, you can have a second story put on. And that's a great way to add incredible value to a property. So attic conversion, on the left you see an old unused attic, and then on the right it's something that can be turned into a bedroom or even a playroom. So basement conversions, they're popular here, also on the East Coast. You can expand or build a garage, expand or build a carport. You can renovate deteriorating properties such as repairing a chimney. Termite and dry rot damage, you can also take care of that. Structural problem, this is a beautiful example on the left. Is a house that someone was purchasing, and if they'd used a 203K program on this, look at the right. The right's incredibly different. There's been some foundation work done, some structural work done. In the end, it's a beautiful property. So potentially you could be looking at a house and making an offer on a property that nobody else wants because of structural issues, but you could go in there and purchase it using a 203K program product and end up with a very beautiful house. So this can really be a strategic advantage as a realtor to learn this product or as a home buyer. You can upgrade the plumbing, change it from galvanized piping to copper. You can upgrade the heating and air conditioning. Electrical wiring. Who's heard of the Zinsco panel? Zinsco panels are known safety hazards that really ideally should be replaced. So you can replace the Zinsco panel with a new 200 amp panel. You can eliminate health and safety hazards such as removing lead-based paint. You can make the home accessible to disabled, putting in disabled ramps. Install a well or septic system, or you could be improving an old septic system or repairing an old septic system. You can add a porch, deck, or patio. So this product is similar to a gazebo, but if it's attached, it's acceptable. Add installing energy efficient windows or doors. And there's actually a way through this program to increase the amount of repairs you can get done using energy efficient mortgage, which is part of the 203K product. Siding and repainting. You can repair an existing swimming pool. You can't put in a new swimming pool, but if the house you're going to buy has one of those swimming pools that looks really green and it looks like it's got things growing in it, you can actually use this loan to actually repair that pool. And there are also some helpful options with the 203K FHA loans. If you're not planning to live in the home during construction, you may finance up to 6 months of the mortgage payments during the renovation period. In addition, you may act as your own general contractor or do the actual repair work yourself if you're qualified. So Lori Gano, she's qualified. She's got experience. She's a licensed general contractor and designer, 21 years, and she's licensed. And she has insurance, so she can do her own work. But you just can't do your own work if you have no experience and you're not licensed. So any money you save this way can be used for cost overruns or additional improvements. You can be reimbursed only for actual material costs, not for your own labor. So energy efficient upgrades, the improvements may exceed the loan limits. There are certain restrictions apply. An EEM can be used with both the Streamline and the standard 203K loan. One interesting combination is to use a Streamline K with an EEM. If your repairs will exceed a $35,000 limitation, the energy efficient improvements can be pulled out of the 203K calculation. And once 203K repair escrow is calculated, the energy improvements can then be added back to the loan, exceeding the $35,000 threshold if needed. The FHA 203K energy efficient mortgage is a smart loan that can save you thousands over the life of home ownership. And this loan should be in everyone's financing playbook. So you can apply and get more information at sacinspect.com. We do primarily the inspection part of it, but throughout doing many of these loans, we've networked with many different mortgage lenders and mortgage professionals, so we can help you find the proper mortgage professional if you need help with that. So we work with lenders all over California. We can help connect you with a loan professional in your area based on type of property you're looking for. So minor renovation under $35,000 in repairs is a 203K Streamline. So you can look at the picture above and the picture below. It looks like they did, on this project, we did painting and some flooring, and we did some rehab on the windows in this project. So that was under $35,000. That was a 203K Streamline. A major renovation over $35,000 in repairs is a full 203K loan. This project on the left, you can see it had full siding, had to be done. There was some foundation work that had to be done. Galvanized piping had to be changed to copper piping. Also, the outside siding had to be done. I think the roof had to be redone on this property. Also, heating and air conditioning. So there was definitely over $35,000 in repairs on this project. So just remember, if it's over $35,000 in repair, you go to full 203K loan. Because many borrowers need professional help in determining need, repairs, or improvements, your lender will assign a 203K consultant to assist you in planning the work and developing cost estimates. The consultant will perform the feasibility study to make sure that the house will qualify for a 203K loan. So after your mortgage professional has qualified you for a loan, you've picked out the house, typically a 203K loan consultant will go out to the house and make sure that you're going to qualify for that 203K loan. Typically, once that's done, then you'll be able to go forward with a full work write-up. So will this qualify? Who knows? We have to inspect it first. There may be this house might qualify. Will this house qualify? Probably not, because if the high power lines are above the house, you can't qualify for a 2 or 3K product. Will this qualify? It could. There could be things inside that won't be covered based upon the value of the property. Maybe it needs new heating and air conditioning and other required items, so it won't qualify. So that's why you need to get it inspected by a 2 or 3K professional consultant so that he can tell if this is going to qualify or not before you go forward. Will this qualify? Will this qualify? A house on well water and not city water? It could, but we'll have to inspect it first, because if it's on well water and there's a hookup that's close enough to the house connecting it to city water, it may be required to connect that house to city water. And that could be that could be like $20,000 or $15,000. So it really depends on the location of the property if that'll qualify or not. Will this qualify? A house and an empty pool? So the minimum property standard inspection, when you have a property under contract, your 2 or 3K consultant will visit the property to verify that the property will qualify for the 2 or 3K loan program. This list is a FHA existing property screening checklist. This list is for reference only and does not guarantee compliance with FHA minimum property requirements, but it'll give you some idea of some of the things that are required. The minimum property requirements are to ensure the health and safety occupants and or the marketability of the property. So we do have an FHA existing property screening checklist at our website if you'd like a copy of it. So when you contact the FHA consultant, the FHA consultant will come out and check your house and do an inspection on it. So what are the items checked at the minimum property requirements inspection? There's 18 different standard categories for the minimum property standard categories. And we're going to go over those just so you have a basic idea that really the 2 or 3 consultant is really adding value, because there's a lot of things to check and to figure out how to make it work. Sometimes you can get creative to make it work, even though it looks like it's a no deal. So number 1, site hazards and nuisances, soil contamination, grading and drainage, individual water and sewer systems, wood destroying insects, private road access, floor support systems, framing walls and ceiling, attic, basement, crawl space, slab, roof, electrical system, plumbing system, furnace, heating system, central air conditioning, and paint. So number 1, the site hazards and nuisances. Sinkholes, aquifer planting, gas drilling within 300 feet. There's a lot of activity here to check for site hazards and nuisances. The presence of the following may indicate unacceptable property condition. 2, soil contamination, surface evidence of underground storage tanks, proximity to dumps, presence of pools or liquids. 3, grading and drainage. Grading does not provide drainage away from the structures, standing water near structures. 4, there's individual water and sewage systems to check. Private sewer system shows evidence of system failure. There's a lot of things to check under this section. Wood destroying insects. Structure is ground level and wood is touching the ground. House or other structure shows obvious evidence of infestation. Local jurisdiction requires inspection. Inspection is customary to the area. Private road access. Private inaccessibility by foot or vehicle. Property accessible only by private road without permanent recorded easement. 7, the floor support systems. 8, framing walls and ceilings, significant cracks, significant water damage. 9, the attic, inadequate access, no ventilation by vent, fan, or window. Again, we're just going over this quickly so you have an idea of some of the areas that are covered without going into it too in-depthly. 10, the basement, blocked inadequate access, cracks. The crawl space, access issues, damage to support beams. The slab, cracks in the slab. The roof, signs of leakage. Electrical system, switches don't work. Exposed, failure, unconnected wiring. Plumbing system, we're going to be looking at the water pressure, toilet leaks, other things. The furnace and heating system will be checked. Different items checked on that. Central air conditioning, if it works or not. Paint, if there's any issues of lead-based paint. So the minimum property standards inspection is what's done after when a 203K consultant goes out to the property, he's going to be checking your house to make sure that it's going to qualify for the program. And then once that's done, if there's under $35,000 in repairs, it'll be a streamlined 203K. And if it's over $35,000, it'll be a full 203K. So just a quick review of the process. Sometimes this process is a little different order, but this is just a basic idea so you can understand the categories. So number one, the customer, the borrower is qualification-based income and credit. Then the buyer selects the property. After that, and they contact the mortgage lender, will typically order the feasibility study through a 203 consultant who will go out there and make sure it's going to be a deal that can be done. And then the work write-up is done. So the feasibility study is where we're just checking to make sure there's no disqualifying features on the property, so the 203K process can't happen. Then a work write-up is done, which shows the value, the cost of repairs and various items for the work write-up. And then appraisal, it's underwritten, loan closes, and then the rehab account is created and funds are dispersed as work is completed and inspected, and the rehab is complete. So these are just some of the ideas, just kind of giving you a brief overview of what the 203K loan program covers, to give you a brief introduction to the process of it. It's a lot to cover, but if you have any more questions, you can visit our website at sicinspect.com. Again, my name is Eric. I'm an FHA consultant, home inspector, realtor, investor. I've been working in the real estate industry over 10 years. And if you have any questions, please feel free to visit us on our website, and I'll be available after this presentation for more questions. Thank you, and have a good afternoon.